Hey guys, how's it going? In today's video, I'm gonna be attempting to do a Medman video on the request of someone asking me to do a Medman video. I'm assuming he wants me to promote this video and say, oh, Medman's the best, invest in it, blah blah blah. But you know what? I'm not gonna do that. I like to expose the truth. I like to show what is good and what is bad about this company. So Medman is a US company. They cultivate and they also sell, they also make their products, and then they also retail their products through retail stores, and the retail stores are very nice looking. They are considered like Starbucks and maybe an Apple store. They have really nice looking stores and attracts a lot of people. The pricing in the store is a little more expensive than, let's say, another regular store, because you know they are catering to the high-end branding. So that's why a lot of people like this company, because they have really nice stores. They're really busy and they grow their own products. So all bonuses right there. They have a lot of workers. They have 18 facilities across the US. They have operations California, Nevada, and New York, and Los Angeles. And recently I heard they picked up some retail locations, prime retail location in Florida for $53 million. This is interesting news. This is back in the day, in October 13, 2018. Medman and Metroleaf had a partnership where they would lean on each other and learn off each other and make good like manufacturing cultivations. So that means that anything that Metroleaf kind of knows, Medman also knows. So Medman has very good cultivation practices, so they can make really good high-end products. So that's really good that Medman has, you know, good product, because they used to work with Metroleaf, and yeah, that's a positive for the company, that's for sure. So in Q4, or I guess in the fiscal year of 2018 or 17, well, anyways, the year end, they saw a $19.2 million US dollars, anyways, throughout the entire year. So throughout the 12 months of operation ending on June 30th, 2018, they made about 19.2 million US dollars, which is I guess is good. That's like $4 or $5 million per quarter. But you know what? I have to bring this up. I know you guys don't like this, but TerraTech, they also have retail stores, and they also cultivate, and they so they grow their own product and they sell their own product. They made a total of $35 million, almost $36 million US, right? Their gross profit is $5.477 million, which is horrible. That's a horrible gross margin to have. I don't know why TerraTech gross margin is so bad, but it is. It's so bad. That's like the worst gross margin. And then they have like a lot of expenses. Total operating expenses was $55 million, and gave them a total loss of $20 million. Medman, of course, they're gonna advertise that, oh hey, we're making lots of money, 19.2 million. How much is that? It's gross profit. How much money are you making off of that 19.2 million? Is that all going to your 700 employees and management? I don't know. They don't have any information on here. I also went on Sedar to look for the revenue. Like, this is the Medman Enterprise ending on April 30th, 2018. I don't think this is the most recent. Hold on. Hold on, guys. Okay. Okay. June 20. Yeah. Okay. This is the one. Okay. April 30th. Is it April 30th? Oh, okay. I guess this is the most recent one. They have a total of $607,000 or $607 million. I'm not sure. It does not tell me in the thousands, so I'm not sure. But I'm assuming $600 million sounds a lot of money, though. Is it $600,000 or $600 million? I don't think it's $600 million because they never even raised that much cash. So they have like $1 million in total, less than $1 million in total asset, which absolutely makes no sense. Like, why is this even on Sedar? Like, seriously? I guess it's in thousands because then there's deficit. They have $5 million in deficit. I have no idea. And then when it came to revenue, they didn't even report a revenue. Like, that makes no sense. They have management fees, which is like the most out of everything here. $27 million. The general administration, everything else does not add up to how much the management is paying themselves. Which makes no sense. But okay. Okay, whatever. I should, like, this is Sedar, so I don't know if this is updated or this is unaudited, or I don't know. Condensed financial internal statement ending 6 months ending April 30th 2018. I have no idea, guys. It tells me they made no revenue and they lost $43 million or $43,000. I have no idea. I think it's $1 million. I could totally be wrong. This financial is horrible. Oh, anyways, and then when I look at Medman on the TSX venture, I noticed that they say that they have 6.5 million shares, a $35 million market cap. And then when I look on Yahoo Finance, they tell me they have a $2.23 billion market cap. So, like, what should I believe? Should I believe the one on Yahoo Finance or the one on, tmxmoney.com? I have no idea. Let's see the financials here. Of course, well, according to the finance ending on May. Is it March? No, wait. February? March? Yeah, March 31st, 2018. They made total $7 million of revenue. $3 million. Their gross profit was $3.2 million, giving them roughly a 45% gross margin. It's okay, I guess, but, like, I don't know if this is accurate or anything. And then the sales and administration was $17.413 million. They took a total operational loss in 1 quarter of $15 million. So the net income loss was $17 million. So far, this company has been losing money. So maybe they can flip a profit in the future. I have no idea. According to Yahoo Finances, they have $12 million in cash. Net receivable is $25.4 million. They have a total of $51 million in asset. No, wait, $178 million in asset. That's a lot of money for property, plants, and equipment. And then they have a total liability of $103 million. Long-term debt of $17 million. short-term and current long-term debt of, wow, holy crap, this company has $80 million plus in debt. That's a lot of debt. That's crazy. And according to common stock is 107 million shares, I guess, at $5. Gives them at $6 at 107 million shares, gives them $644 million market cap. I don't know where the real financials is. I looked on Sedar, I looked on Yahoo Finance. This company clearly is not easy to research on. So I don't know. Right there is a red flag for me personally. And then let's watch some Jim Cramer talking about Medman. I have something in here to explain, so let's begin.
I never imagined I'd spend so much time talking about marijuana on television. Not really my area of expertise. But now that it's been legalized in state after state, it's becoming big business. And that's something I do know about. Now, last month, a U.S. licensed cannabis firm called Medmen, not to be confused with Medmen, executed a reverse takeover to become a publicly traded company in Canada, where the federal laws on this stuff are a lot more lenient. Medmen is a major player in America's budding pot industry, operating in New York, California, and Nevada. They grow it, but more importantly, they're best known for their retail locations, which have been dubbed the Apple Store of weed. They want to be the consumer cannabis company. To be blunt, it's an intriguing concept. So could this stock be worth owning, even if it's only listed in Canada? Let's take a closer look with Adam Bierman, the co-founder and CEO of Medmen Enterprises, to learn more about his company's business and the incredible growth of this industry. Mr. Bierman, welcome to Mad Money. Good to see you, sir.
Thank you for having me.
Have a seat. Absolutely. Okay, so first, California, New York, Nevada. Why those?
And now Florida, which we're really excited
Florida,
about.
which you just bought. But nothing. Can we buy it yet in Florida? At stores? Medical only.
You just mentioned the 4 most important marijuana markets on planet Earth today. So, yes, we are excited to be in those 4 markets. And 8.5 years into this, we've been hyper-focused on just being in the most important markets and controlling the most important retail assets in those markets. And that's where we are, and that's where we'll continue to grow.
Now, the natural person would say, well, wait a second. How about Oregon, Washington, and Colorado? But they're pretty saturated, aren't they?
Horrible markets to be in.
Horrible, right?
But you got to understand the evolution of this industry, right? Those were the first 3 markets.
Right.
Good for business that those are tiny markets that in the grand scheme of things maybe matter not that much. And those are more free market environments. What's really important to understand is every market since those markets came online have been supply constrained. So limited licenses, and most importantly, especially for the Medmen's case, the most arduous retail zoning restrictions known to man.
Well, how about Massachusetts? What's taking so long?
This is what it is when something evolves, right? We're going from
But a dispensary, I mean, how long does it take?
It's bureaucratic, man.
It really is, huh?
You know, that's what it is. I mean, you know, over 25 years ago, California legalized medical marijuana. It's been quite a journey. And so I think there's a lot of speed and a lot of momentum now. I think that, you know, the end of prohibition is near, but, you know, things don't happen overnight, and that's okay. For a $75 billion market here in the U.S., it's okay if it takes a few years to evolve.
Now, your revenues have exploded this year, right? I mean, it's been rather amazing how much sales you've been able to garner from these beautiful new stores.
Well, I appreciate it. I mean, you know, for me, every day I wake up, I'm intent on building the biggest marijuana brand in the world. Our more mature stores in California are doing over $20 million a year in revenue, and we currently have licenses for 45 stores. So a lot of work to do. But yeah, I mean, revenue is big for me. You know, when we get to $1 billion of revenue, we'll look at what's next. But a lot of work to be done.
Okay, so let me understand this. You did what was confusing to me, admittedly, a reverse Canadian merger, and there was also a flap about your pay package, of which I understand you've made some revisions to the executive compensation plan. So just fill me in on the arc of that.
Well, I mean, look, let's talk about Canada.
Okay.
From the beginning, we've been the why not people. Why not? 8.5 years ago, why not? Why can't you build a legitimate business in this industry?
Right.
Why not? Why can't you build a $1 billion business in this industry? Why not? Why can't you take the biggest U.S. weed company and make it public and available for people to own all over the world? Now, there's a lot of roadblocks in that
Right.
kind of an attitude, and we can't list here in the U.S., so we have to list in Canada, and unfortunately, you know, that's the only place to go. Now, fortunately, it is a place to go, and they've been
Right.
great partners, and we were really excited about everything that went on, and, you know, we're now listed on the CSE. We got our OTC ticker today as well.
And the compensation package issue has been resolved, right? You reopened it and you gave yourself, you know, a better deal for the shareholders.
Well, look, there's a lot of noise, right? And there's a
Right.
lot of noise. This is a nascent industry, a lot of noise. I think what investors need to hone in on is really two basic fundamentals: the defensibility of the thesis of these businesses,
Right.
And the track record of performance. And so we'll just keep our head down and keep performing the way we have. Now as a public company with even more.
Okay, see how I kind of wanted to let him talk about his company a little bit, talk about everything, and then I kind of wanted to pause on the fact that he said, when Jim Cramer asked him about the benefit plan, he sidetracked the question once, and then when Jim Cramer asked again, he sidetracked again with the question. So he obviously does not want to talk about that subject, about all the benefits that management is getting from this whole share deal. He doesn't want to talk about it because he knows that it's not a good deal. It's a very good deal for them, but it's not a good deal for shareholders. So yeah, and let's get into the. So I guess I'll before I get into it, I just want to say that Medman did try to raise enough money to evaluate the company at $2 billion. So they raised $143 million worth of shares that would evaluate the entire company at $2 billion. So they sold enough shares for $143 million, giving them an evaluation of $2 billion. I don't know. I think they sold like 10% of their shares, or a little less, like 8 or 7% of their shares, for a total of $143 million. That's why the evaluation is $2 billion. And then Equity Guru, this guy right here, he really bashed on Medman. This was posted on May 28, 2018, stating that as part of the deal to go public, Medman is selling $100 million worth of new shares, which will give the investor roughly 6% stake in the company. The deal values the company at around $1.6 billion. That's 60% richer than 2 months ago, when the company raised money from a Canadian investor firm valuing at $1 billion. But hey, not just watching Mr. I can't even say it, find cheap money for the company, he's also getting cheap money personally. The CEO and chairman will receive US of $1.5 million per year in salaries for 4 years, plus $10 million in redeemable units based on share price that have vested, plus another $30 million in long-term incentive plans unit vested over 24 months at the end of every month. $1.5 million in salary, another $50 million in annual incentive, and $10 million just cuz, for a total of $26.5 million off the top. That's a lot of money. And then the president, Andrew Morton, same deal, $100 million raise, new shares going public, $53 million going straight into the pockets of these big two executives. So they are raising a lot of money and stuffing their pockets with a lot of money, according to this article. And then suddenly they came out and they tried to sue Equity Guru. We are in litigation counsel for Medmen Enterprise. It has come to our attention that you and your team, through your website Equity Guru, are actively and intentionally seeking default of the company engagement in fraudulent and deceptive conduct. We are investigating your past and ongoing actions. So now they're trying to sue Medman. Medman lawyers are trying to sue Equity Guru for posting bad comments on by trying to reveal, the bad in the company, which is kind of hilarious. I mean, of course they're gonna try to sue him. So, you know, they back off, but in this article, it also states that on June 8, 2018, Medman co-founded, they changed it. So they won't get the full incentive until the stock price hits $10 on the open market, and they won't and then they'll receive the other 1/3 when it hits $15, and they'll finally get 1/3 vested in the share price when it reaches $20. So in order for them to get the full benefit of everything they were promised in the thing, they have to reach at least $20. And I don't know. I don't think this stock's gonna reach $20 just because, like, I don't see it happening. There's a lot of competition in the United States. I mean, granted, they have really nice stores. They overcharge for their product, but they have a lot of competition. They don't have very much capital, and management seems to want to stuff their pockets with money. So I don't know. Like I said, I made this video not because I'm trying to pump the stock. I made this video because someone asked me to make a video on Medman, so I'm making a video on Medman. Apologize for making such a video that's not positive about Medman, but I just don't see anything so positive about this company besides the fact that, you know, they have nice stores, but then management is greedy. They have a ton of employees, and the US also tax them very heavily on cannabis. So there's a lot of disadvantage for this company. This is my opinion. Anyways, thanks for watching. If you like this video, please give me a thumbs up. If you dislike this, you're probably gonna dislike this video. Please give me a thumbs down. Subscribe for future updates, and have a great day. Bye.